Today I'll be speaking about the Snowflake IPO, which is opening tomorrow. I'm going to give you my honest, brutal opinion about why you should not buy. But if you stick towards the end of the video, I'm going to give you 3 key actions, what you can do to profit from Snowflake IPO. So I'll see you back in this video for my honest review. Hello, welcome back to Family Investment. My name is Alex Koh, and today I'm going to give you my review, my honest opinion about Snowflake, the IPO. Don't get me wrong, Snowflake is a wonderful company, great branding. The ticker is going to be coming out as Snow, S-N-O-W tomorrow on the stock exchange. Wonderful. Branding is number one. If I ever open my own company, an IPO, I'll call it Dim Sum. We sell fresh hakao. Yeah. Yeah, the name Snowflakes doesn't tell me much. I have to read into it. I thought they were selling some makeup brand or something. But Snowflake apparently is a cloud service provider company. It's slightly different from the likes of Microsoft's Azure, AWS and Amazon, or Google Cloud's platform. It's slightly different. Apparently it's like the Shopify of the cloud services. Basically, it's got a software that companies, like say for example, Shell comes in and say, I would like to cloud everything. So cloud everything come to Snowflake, we'll do it. We'll do redundancy. We'll send some to Microsoft. We'll send some to Amazon. We've got a software that runs everything. So what they have is a software, a data housing software that's really smart, that can be operable with very minimal people. People call it pure play independent tech. Basically the Shopify of iCloud. It's a cloud services company. So why is there so much hype about this stock? You know, don't believe everything you read, but some things people can stir and make it so big. It's 2 things that make it such a big deal. Number one, Salesforce is investing on the IPO or pre-IPO. And secondly, our granddaddy of all, Warren Buffett's team, Berkshire Hathaway, will be buying shares at IPO, which is never done. So because Warren Buffett's buying, everyone's going, I'm going crazy, we have to buy, he's never done it before. But come on, calm down, calm down. Warren Buffett wasn't there when Facebook was IPO. Warren Buffett wasn't there as Amazon. What are they doing now? It's not him, it's his team of people that is evaluating it, thinking that they have to get into this sector because that's what they are missing there. Berkshire Hathaway is more consumable, staple energy. And now they want a bit of cloud. So that's only, so nothing big deal, so calm down everybody. The other facts that I would like to say is, the great thing about Snowflake is there's a comparison, some smart fella did a comparison that during the 6th year, the revenue for Snowflake is number 3, the top 3 in the world after Zoom, CrowdStrike, Snow and Shopify. So among all the IPO in the last 10-20 years, on the 6th year, the revenue has just streaming up. It shows you about their product, about the customers they're pulling in. So it shows that Snowflake's potential of growth is required. Their money from the IPO is required for them to grow even bigger and compete with the other big scale competition. And innovatively, disruptively, they're slightly different. So when it comes out tomorrow on the IPO, they're expected to go as high as $30 billion. Again, those people writing a Wall Street Journal, all these people trying to hype the stock, guys, don't fall for the trap. Do you know at valuation, you know, all the smart people from Goldman Sachs, Ernst Young, they value the company at $12.4 billion optimistically. And why would you want to inflate and push it up to $30 billion? So they're trying to come at the norm of $50 a share, which is worth $2.6 billion. Putting in context, CrowdStrike is worth $30 billion today, and they're doing really well. They've been smashing their quarters again and again, and with the COVID-19 boost. Zoom is worth $116 billion, overpriced, overvalued, but they are busting on their earnings every single time. So think about it, put that in context against this company, because it's hard to value an IPO company. Last 3, so the 3 actions that I would like to share that I would do, because I'm not buying this at IPO, but only 3 actions. So the first thing that you can do to make money is the pump and dump. If you can get in buying the IPO when it comes at 50, you'll be rocketing when it comes open day. If you get 50, 60, you'll rocket all the way up to 70, 80 and try to let go before it hits 100. You might make a decent 30-40% profit if you have the speed, capacity to go in and the guts to go in. So pump it and dump it, go in at the earning 50, 60, you go all the way up dump it and then come back down. Potentially, if $30 billion go flowing into Snowflake tomorrow, think about it. People will be liquidating stocks from somewhere else. People have to sell something to buy. So the likes of Tesla, Apple, Nvidia are the hot stocks that people have been buying. They could have dumped a bit and then go Snowflake, transfer the risk, make money and come back in. So look at other bargains, look around you. There are other bargains that you could go for, other bargains that you could buy. So they potentially might have a dip. It's the same effect when Uber went IPO. All the money's been flowing, 30-40 billion pounds. Every other stocks will start dipping because money is flowing influx into Uber. Same will happen to Snowflake if the hype is real, if the hype is real about it. If Snowflake does turn out as a superb company, a really proper unicorn who's going to turn into a big beautiful butterfly, then buy after month 7, because it takes 6 months before initial investors can dump their share, take their profit. So wait until month 6, around about 7 months, then start buying because you start on the dip. Look at all the trends like Ferrari, Facebook, CrowdStrike, Fiverr. They've seen that trend going on and then dump. Beyond Meat, play that game. That's the way it goes. Look at Lemonade, okay? All I can say is a great company, Snowflake. I'm excited to see how it unfolds, but I am not buying into the trend that everybody's going crazy about. Don't go FOMO. There are loads of other quality stocks that you can look out, or you can play the pump and dump game, or you can just simply wait for the right price to go in. So the right price to go in is, like I said, at 12.4 billion pounds valuation, it'd be $50 a share. At 30 billion pounds, it'd be $120 a share, and you might hover between 100 and 110. So it's going to go crazy for the next couple of days, next couple of weeks. But pay the price of a company is what you pay. The value that you sell for later is what you get. So do not pay so high, or else you cannot sell it too high enough to get you profit. So this is me, this is my honest opinion, and please do not steal my idea about dim sum IPO, because that's my IPO. It's going to be dim sum by Alex Ko. So have a good day. Please like and subscribe, and hopefully to see you soon, and I will share with you my brutal honest opinion about companies.
Alright, before I say goodbye, please do like and subscribe on my YouTube channel, follow me on Facebook, and if you want, support me on Patreon as well, so I can produce content like this every single day for you guys, to give you guys value. So please do share this video to help us grow our YouTube channel, yeah? Yeah. Alright guys, 3, 2, 1, bye bye.